Hello and welcome to our market alert video for today, which is June 24th, Friday, 2022. And once again, a lot to talk about with the economy and the stock market and everything else. So let's dive right in. Although before we do, I just want to share with you a tip that I got from a client, which I did not follow. My middle daughter is getting married on August 6th. And of course, all the stuff about, the marriage and the wedding and oh my gosh, a lot of stress, a lot of stuff happening. Client who's been through 5 weddings told me, he said, Ken, if anybody ever asks you for your opinion on something, your answer is, I don't know, what do you think? And then turn around and run away. Well, I did not do that. I was asked my opinion. I gave it and was summarily slapped down and told, well, who asked you and why do you even think your opinion matters? So guys, if you have a daughter getting married, my tip to you is if your opinion is asked, your answer is, I don't know, what do you think? And then turn around and run away. Save yourself. Anyway, so let's talk about the rally we've seen here in the market this last week. And is this the end of the bear market? Is it now time blue skies and sunnies and the sun's shining? And is it time to buy, or is it time to sell? And so let's discuss that. So first of all, I'm going to ask you to consider what's going on and help you to make that decision for yourself. Okay, I'm not going to tell you what to do. I'm going to help you to think through it. So the first thing is the Fed isn't done. Okay, the Fed is not done. They've said they're going to raise interest rates some more. There's talk about 0.75% at the next 3 meetings, and then maybe even beyond that, and how sticky is inflation and all that. So they're not done. And they just raised interest rates like 14 seconds ago. So we don't know the full effect of what the Fed is doing. And, when you raise interest rates, it trickles through the whole economy. We don't know that yet. We haven't even seen it yet. So to make any decisions right now about where we are in the bear market, I find that difficult to do right now. The other thing is that with the war in Ukraine and the whole situation between Europe and Russia, they are going into plan B right now, which is austerity, because they're not going to be getting gas. They're not the natural gas. They're not going to be getting, their energy, and they are readying themselves for a very severe recession. And Europe is one of our biggest trading partners. So let's put that into a smaller context. And let's say that you're a business and one of your biggest customers is having hard times and they're not going to be buying stuff from you. What does that do to your profits at your business? Well, Europe is one of our biggest customers. And if they're going to be in a bad recession, that's going to hurt the companies here in the United States that sell to Europe. And that's a lot. So that could hurt our economy as well. And profits, as you know, we think drive the stock prices. So the other thing also is we just got consumer confidence numbers from the Michigan survey this morning, and they look dismal. 14% drop in consumer confidence, biggest drop in decades. 70% of our economy is the consumer. So if the consumer is feeling not good right now, if they're feeling insecure, they have low confidence, they're not going to go spend. And if they don't spend and they are 70% of the economy, again, profits could be hurt. And as we say, profits are hurt, stock prices are hurt as well. And then, of course, tying right in with that is you have the consumer dealing with high food prices, high gas prices. People are having to make decisions now as to whether they're going to feed their family or go on vacation. That's how bad it is out there. And that's why, this whole thing, we haven't begun to see how bad it's going to get in our view. And the other thing is, unfortunately, is we're starting to see companies laying people off. We're hearing banks and financial institutions and, Tesla and others who have said that they're going to start laying off people, and large numbers of people, 10% of their workforce. So when that starts happening and if it starts to build on itself, that could even bode very badly for consumer confidence, spending power, the economy, and therefore the stock market. So my question to you is, do you think this is over? Do you think it is now time to buy or time to sell? Now, many people have said, well, Ken, is it too late to sell? The market's so far down. My answer is, compared to what? if what happens, if what we think is going to happen, which is Dow 25,000 does happen, is it too late to sell now? 25,000 is 20% from here. So, in our view, taking your chips off the table and avoiding that is a better idea than staying in because you think it's going to go up. So which is the biggest mistake you're going to make? You miss out on going up, or you lose another 20%. So go to our website. It's rpoa.com. Visit with one of our retirement planners, and we want to sit down with you. We'll build what we call our retirement cash flow plan with you, the RCFP. And in the RCFP, we'll help to determine if it's appropriate for you to get out of the market right now or not. As you know, our strategy said to sell in November of 2007 before the big market crash. It also said to sell before the pandemic was announced and the stock market crashed after that. So we want to help you to protect your retirement. And so if you go to our website, rpoa.com, and visit with one of our retirement planners, then we can help to do that as much as we can. So thanks for watching this video, and we will talk soon.